It's unfortunate, but yet another mortgage trust has gone under. This time it's Provident Capital. Now, as we know, a lot of mortgage trusts over the past few years have gone under, in particular during the GFC. Some of the bigger names, of course, were MFS and City Pacific, that both had approximately $1 billion each under management. Now, mortgage trusts are quite attractive, in particular to the self-funded retirees, purely because of the fact that they guarantee, in inverted commas, a far higher rate than what they would just by having money in the bank in term deposits. So they do attract unsophisticated investors, and you can see that by the size of some of the investors that they make in these mortgage trusts. But have a look at some of these comments that were made by Property Observer. About 3,000 debenture holders are owed around $128 million by Provident Capital, with redemptions frozen following the appointment of receivers. Then they say this: over $22 million worth of debentures were due to reach maturity by the end of June 2012, with close to $54 million falling due by December 2012. So they're interesting numbers right there. If we average out the $120 million that's owed to the 3,000 investors, we have an average investment of $43,000. Again, not necessarily sophisticated investors, and of course there would be investments that are far lower than that. But there's one common denominator with all of these mortgage trusts that have gone under since the GFC. They all seem to be overexposed to a handful of developers, and this is where they all get into trouble. Now, the property developers that do utilise these mortgage trusts are usually developers that are having trouble accessing money from your traditional lenders, your banks. Going to the mortgage trust, you don't need to jump as many hurdles as what you would with a bank. But my issue is with ASIC as well. ASIC regulate this industry, they regulate the lending industry. However, they don't regulate the property industry, property being the number one asset the majority of Australians will ever own. It's not regulated, yet that money is being put into the property industry. It's going to be interesting how all of this plays out in the coming months. I'm Iggy Damiani. I'll see you next week.